Good morning, everybody. It's a pleasure to be here this morning, obviously, because it's such a great event, and it's one that's grown over the years. So it's really fantastic to see so many of you here and to sort of speak to the testament or be a testament to how strong, we've seen lending as a subsector, but obviously fintech and financial services really get affected by innovation and all of the talent that we have here in London. So it's a pleasure to be here for that reason. It is then a particular privilege to be sitting here next to Antony, who's obviously somebody that I've respected for a great number of years, and now I'm just watching with great admiration and fascination as he embarks on the journey of leading the team at 10x and all of the work that they've already talked about, what they're going to do. The topic, as was already mentioned, is about myth-busting artificial intelligence, and I think there is no better person to talk about sort of the differences or the gaps between hype, myth, and reality than somebody who's had such a great background as Antony and is in the forefront of leading innovation now for financial services at 10x. So I think to open, this might be sort of obvious. I could be sort of an automated moderator for this part, but I feel like we should just jump right into it. And given that the session title is Myth-busting, I'd like to ask Antony, given how hyped AI is, what do you think are the biggest myths about artificial intelligence, and specifically as relates to financial services?
Well, thanks so much, Eileen. It's great to be here. Good morning, everybody. I think just before I go there, a couple of context points which I think are really important. Okay. So if you think about what's driving this revolution we're seeing in financial services, it is all about the availability of super low-cost, high-powered computing. So when you think about artificial intelligence, a lot of what is possible today was not possible 3 years or 5 years or 10 years ago. And equally, if you fast forward, there's going to be even greater possibilities in the future. So that context point is really important. The second thing I'd say is we've arrived at what I would describe as the end of the beginning of the fintech revolution. So if you're out there in a fintech, congratulations, you made it to the end of the beginning. If you're out there in an incumbent bank, congratulations, you survived so far.
So far.
But it really is the end of the beginning. And I think the last presentation was very good in sort of setting a context for where the industry is. We can pick any number of companies to put on slides like that. But it shows that we've had this kind of flourishing of quite narrowly focused business propositions looking at parts of the financial services landscape. Now, if that's the context, what's going on? There are two technologies which I think are going to be transformational in the future. One is distributed ledger technology, which we're not going to talk about. The other is artificial intelligence.
Both of which are overhyped.
Both of which are overhyped.
Opinion.
But as people who study this stuff for a living will tell you, we tend to overestimate things in the short term and underestimate them in the long term. So let's talk about artificial intelligence. So firstly, there's a lot of buzzwords around artificial intelligence. What's the difference between AI, machine learning, and just sort of standard statistical modeling that banks do? And the way I like to think about that is really on two axes. So the first axis is how much is human being augmented by machine, and how much is machine really with a little human augmentation. And obviously, the more machine component there is, the closer you get to AI. The second thing I would say is how autonomous the software can be in determination. And those are really the two sort of axes that we have to think about this on. Of course, banks and other financial institutions have for many years used very complex statistical modeling for things like credit scoring. When I worked in the credit card industry in the 90s in the United States, we ran the largest database in the world outside that of the US military. It wasn't a very efficient database. It was a lot of sort of statistical cubes which were built rather expensively, and providers made a lot of money off the back of us. But these sort of techniques have been around for a long time. I think what's different about now versus then is the compute power and what you can do with it. But just to get to those myths. So what's the first myth? The first myth is that AI is going to become sentient, that in some way we will reach the singularity and suddenly we'll all be working for the machines in a kind of Matrix-style way. I don't think that's going to happen in the next 10 or 20 years. I think there's a possibility it could happen eventually, maybe in my lifetime, maybe not. The second is that AI applications are all black boxes. They're not. it is entirely possible to see what is going on in an AI application, and in many ways, regulation now like GDPR requires customers to be able to see how decisions are being made around them, and that is obviously the right thing. And of course, this gradation between statistical modeling all the way up to AI, in reality, a lot of what is badged as AI today is just kind of either more sophisticated statistical modeling or machine learning. And that brings me to the sort of third myth, and I think the biggest myth of all, and that is that banks and other big financial services providers are advantaged in this new world. Because the logic is that they have a lot of data, and therefore they ought to be able to be better placed to run these algorithms. The truth of the matter is that in almost every financial institution, that data is fragmented across many different technology stacks, and it is incredibly difficult to run even machine learning on these databases. Most banks have tried to pull them together into a central repository. It requires a lot of data cleansing. It's very expensive, very slow, and actually, frankly, imperfect because the data is in the wrong place. Now, that problem will be solved and can be solved over time. But as with everything in fintech, I think what's going to drive the AI adoption is not going to be by the incumbents. I think the incumbents will attempt to catch up. Some will succeed, some will fail. But actually, all the interesting AI applications I see are being driven out in the kind of startup and very focused kind of areas of the world. In my own business, 10x Reach Technologies, we have a number of AI engines that we've built into the platform to do very specific things. But basically, again, with AI, I think we're even before the end of the beginning on this one. But I do think that, going back to what I said before, that it is one of those fundamental technologies which is going to allow, over time, a much fairer, more transparent, and critically lower cost financial services system.
Okay, brilliant. And thank you for articulating that so clearly and putting it in 3 myths, although there's so much I want to go back on. I'm going to try and go pick at it sort of one at a time, maybe in reverse order, given the last myth that you mentioned, where you don't think that big banks or the larger financial services institutions have any advantage, and that you see a lot of the driving change coming from the smaller fintech companies. If that is the case, and we assume that we think this innovation is hugely fundamental, as you said, and very transformational and important, how do you suggest, or how do you see collaboration between the larger incumbent companies then and fintech SMEs with respect to AI? I know that's such a big question, but maybe just with respect to whether it's data or artificial intelligence or machine learning.
Yes, and of course, one of these things that's enormously helpful in this is the implementation of PSD2, which will provide access to data and to transacting capability off the back of that data. But it seems to me that, if anything, that makes it even harder for the banks because people will be able to cherry pick various data sources from them. Collaboration is always possible, but I've used this analogy before, and if anybody is out there in a big bank who's tried to work with a fintech, or in a fintech who's tried to work with a big bank, you'll maybe get a kick out of this. But it's a bit like a mouse trying to dance with an elephant. It's sort of a bit awkward and doesn't always work. When it works, it's a beautiful thing. But the perspectives are just so different. So if you're at a big bank, you're worried about compliance, you're worried about risk management, you're worried about control of your data, which means that you inherently move very slowly and cautiously. That's not an irrational perspective, by the way. If you work in a big bank, that's an entirely rational perspective. But actually, everything that we know about innovation is that you have to move fast and fail fast, right? So, running lots of small kind of AI projects and prototypes is the way to learn and the way to build on that. So I think it is possible that we will see collaboration across the piece. I think it's going to be quite awkward. I think the biggest defining factor of success here will be CEOs in big financial institutions, banks, insurance companies, asset managers, who are willing to say, actually, I need to start this activity, put it over here, ring fence it and protect it, and let it go on its own. Right. In other words, create a kind of internal startup and protect it from the mothership, because the mothership will come and kill it if it can. Okay. Not out of bad intent, but just because that's what it's programmed to do.
Sure.
And the conversations, many of you will recognize these, the conversations that people had, oh, you can't use cloud computing, that's too risky. Have you had a look at your mainframe stack lately? I think I'd rather take the cloud over the mainframe most of the time. We can't use open source software, it's all rubbish and full of, corrupt stuff, obviously not true. These internal cultural resistance to change is really the biggest barrier to entry inside any incumbent. It's not unique to financial services. You see it across all industries that have gone through rapid technological change.
Well, so then I guess the biggest risk to the board of a big bank or financial services institution is if you have a chief exec who's willing to do what you say, what is the risk of them going off and setting up their own company? Just kidding, you don't have to answer that. But, okay, so having said that, and you think about potentially collaboration, that's the measure of success, what do you think will be the greatest benefit out of AI? Will it be to consumers at the end of the day, or will it simply be to the corporations or the services institutions themselves being more efficient and so on and so forth?
No, I think it's going to massively accrue to the consumer. Okay. Firstly, because you can make better and more targeted offers based on a better understanding of what the customer wants. Secondarily, you can make better credit assessment. So people that are capable of supporting more credit will get more credit, and equally, people who can't support credit will get less credit, which is a good thing for them. And I think the transactional velocity improvements that can be made and servicing improvements that can be made through the use of sophisticated AI-driven chatbots and so on is all going to be good for the consumer. What we see in industries like financial services is there's a lot of kind of rent-seeking behavior and money made out of inefficiency in the system today. And a lot of that gets squeezed out as these newer technologies get provided. Now, if you take a societal view of that, that's a good thing, because the more people that are engaged in the economic system, the more economic activity we have, the higher growth we have, the more prosperous societies we have. So there's a big societal payoff as well as a big consumer, customer, and indeed corporate customer payoff. Unfortunately, it's not so good for the banks because what we've probably seen in the period between the late 80s and the crash is the heyday of banking profitability, and that will never return.
And so for consumer benefit, and you've already alluded to things such as credit risk scoring, and you've talked about sort of the efficiency of algorithms and things like that. Are there any other examples that you can think of or that you see in the industry, either coming from these fintech SMEs or otherwise, that are really great examples of how AI is going to fundamentally change things? Yeah,
I mean, if you look at almost every single vertical, identity is a really important area. And increasingly in the digital world, how we determine the true identity of individuals, from which stems a lot of other issues. So the whole anti-money laundering, KYC industry that has grown up is really about failure of identity. If we could perfectly identify every customer in the financial system, we wouldn't need any of that cost at all. But also, it would be much easier for customers to get access to the services that they need. So anybody here who has lived in one country and moved to another country and tried to open up a bank account, it's a disaster because it's as if you didn't exist. If you were born, I tried to do this in the US. If you weren't born in the US, you didn't exist. It didn't matter that you were 32 years old and, had a mortgage and a current account savings and all those other things in the UK. So identity is really important. And in order to establish identity, you have to do verification, which means pulling lots and lots of different data. Many of you will be working with microservice providers that will do biometric verification and other types of identity verification. Those things, of course, all are massively benefited by the application of AI. So once you can establish identity, then the provision of service becomes easier because you can make judgments about people's creditworthiness, you can make judgments about products and services they need, and ultimately you can become much more operationally efficient in how you deal with the customer. So you can anticipate what the customer needs and so on. So AI goes across every single aspect of those things, but back to the myths, it is still extremely early days. Sure. And in order to run AI, you need firstly to have relatively clean data and a lot of it. You need to be able to access it to run the algorithms, and ideally you need to be able to do it in real time. And those are all problems that have to be solved.
Challenges we prefer from an investor point of view. No, but fair enough. And actually, it's a great segue back to then your second myth, which was, if I can paraphrase, AI is not a black box, and you're talking about all the data that has to be cleansed and used. But you also, when articulating that myth, talked about then, therefore, the challenges to regulators. So I just want to touch on that really briefly. Given that, as you say, AI can touch on every single facet of offering financial services, from identity to credit risk scoring to access and the like, and it's really cradle to grave, regulators have historically had a job of effectively checking governance and appropriacy by humans and by processes and making sure that they were following the right processes. If this starts to be fueled by artificial intelligence and algorithms and computer programs, how do you anticipate regulators being able to foresee what are the checks and balances they need to put in place, and how can they possibly keep up?
Yeah. So every technology that man has ever embraced has been used for great good and great evil, and used positively and negatively. That is not a function of the technology, it is a function of the human condition. When we think about the role of regulators, regulators are basically trying to ensure that the system works as it should in a fair and transparent way for the end users of the system, principally consumers or businesses. At its heart, that is a data problem. I was astonished to learn that there are 40,000 people on Canary Wharf doing compliance. Now, if you think about that, all compliance is making sure the bank's doing what it's supposed to do. You've got 40,000 people making sure the bank's doing what it's supposed to be doing. It's crazy. So AI works in two ways. Firstly, banks can use AI to better determine for themselves what they're doing, and can make interventions more quickly and correct bad behavior. It also works for regulators, because regulators can use AI to assess banks' performance themselves. They can look at the AI that banks are using and decide whether to rely on it or not. The concern, of course, is that if there's some big black box working away, and everybody likes the example of Go and DeepMind, and Go came up with strategies that humans hadn't, and they didn't make any sense, but they worked. And then the Facebook bots that started talking to each other in the language nobody understood. And of course, those things are, they're sort of edge cases of what's really going on here, right? So actually, for most models used in financial services, they aren't black boxes. There's still human elements into that. And there are, in any event, techniques that can be used to determine how the black box works, if there is one. The perturbing, as it's called in the sort of art of AI, of a algorithm, by changing the inputs, you can then determine what the outputs would be, and you can run statistical modeling on the outputs to actually determine how the inputs relate to the outputs. So I don't think this kind of black box concern is real, but it doesn't outweigh the benefits. Okay. So like all the technologies that we've embraced, they have their positives and their negatives. But I think in this case, it's overwhelmingly positive.
Net positive, okay. And so this is really dangerous, because I have to be conscious of time, but I've left your first myth for last, and it's, I think, a topic that we could spend hours talking about, and you've just touched on it again as well. So your first myth was that we won't be seeing the sort of rise of sentient machines, or AI, for quite some time, and you kind of anticipate 20, 30 years. But you did also just refer to AlphaGo, which was the DeepMind software, the computer program, basically, that beat the world's best Go players. And I actually just saw last night the London screening for AlphaGo, because it's just premiered at the London Film Festival, and it is astonishing. So a plug for a movie that I had nothing to do with, but it is really, really touching and moving. It's remarkable how human emotions are evoked when you watch a film about AI. But one thing that is really underscored in that film is that the success of AlphaGo in beating the best Go masters of the world wasn't anticipated for at least 10 years' time, even by those in the AI field. And so right from the start, it was assumed that the human world champion was going to beat and win that tournament 5-0. And so you've talked about, though, you don't think sentient machines are going to take over. We think that regulators still have a role to play, and they'll still be able to. But what do you think, and maybe, actually I think it's very apropos to financial services, because what do you think we need to be putting in place now, which might not be a regulator's duty, but it might be the researcher's duty, or I'm not sure whose duty it is in terms of ethics and responsibility against artificial intelligence. I mean, who is going to oversee the people that are coding in the inputs of the algorithms?
Yeah. Well, actually, I completely agree with you, because if you look at the literature around autonomous vehicles, 10 years ago, even 8 years ago, people were saying, never in our lifetimes. And now people are saying, 2020, 2022. And so we do have this tendency to underestimate the acceleration of technologies. Yeah. And I think, this is not to say that, in my view, that we aren't going to see a massive acceleration of AI capability. I really think we are. But with it comes a lot of serious ethical issues. For example, if I can perfectly predict your lifetime healthcare needs, you may have very low healthcare needs. You might have great genes, you might, and you do all the right lifestyle things. Yeah. I might have very high healthcare needs. Does that mean that I then become uninsurable from that point of view? Does the idea of mutualization, which underpins a lot of how society works and how a lot of financial products work, does that even become irrelevant in this new day and age? And so the ethical framework is one of the most important things that governments have to think about. And I know in your work as the envoy, one of the things that we always have to get right is the legal and regulatory framework. That's one of the most important things, in fact, one of the few things that governments can control.
And so do you think companies, whether they're the larger financial services institutions or incumbents, or the smaller fintech SMEs that are coming through and pushing the innovation through, do they have a role to play as well? Or, for instance, DeepMind, I think, is part of an industry group that's setting up an ethics board.
Of course. I mean, self-regulation is the best type of regulation. And recognizing that self-regulation is not only the right thing to do, but is in the interests of corporate organizations, is the right thing to do. But I think history has shown us that relying on that alone tends to lead to bad outcomes. Whether that was, the trusts in the US in the late 19th and early 20th centuries, or the financial crisis in the 21st century, we cannot rely on self-regulation alone, I think.
Okay. I have two more questions, and then I'll close out, because I know we're going to be coming up on that cuckoo sound. Within financial services, but also you as a chief exec of a company, we're talking about all these innovative technologies and skills. I don't know if there's a skills shortage now, but there's clearly a need for highly skilled people that are experts in artificial intelligence. Where do you find the talent? Where does 10x recruit from? Are they coming from universities? Are you training them in-house? Are you bringing them from the larger financial services institutions?
Actually, the one place that we're not bringing them from is financial institutions.
Okay.
AI is a relatively new category. So there are people who have PhDs in AIs, but none of them are more than about the qualifications are not more than sort of 10 or 15 years old. So we've tended to go to places like healthcare, where there have been sort of massive data sets that people have attempted to use AI to be predictive about healthcare outcomes and so on. So we have a number of PhDs in AI in 10x. None of them come from financial services.
Fantastic. Okay, so last question. Given that you've admitted you have a number of PhDs working on AI at 10x, are you at liberty to sort of give us a clue as to some of the things or projects or initiatives that you're working on, or how you're incorporating it at 10x?
Yeah, I mean, the whole thing about 10x is we recognize that the banking system is incredibly fragmented today. The data is fragmented. If you put the data in one place, you can serve customers better, you can do it at much lower cost. That's the whole problem we're solving. And really, AI is an accelerant of that process. So we've put it into the platform to look at things like how fraud works, how customer interactions work, and the more standard applications that you think about, like credit and so on.
Brilliant. Right. Well, thank you very, very much. I know I've made you run the gamut on all these different things, but I appreciate your laying out the three great myths and talking through your personal views on it. Really looking forward to seeing 10x deployed in larger systems, and thinking about how soon we're going to see the rise of the sentient machines. So thank you very much, Antony. Please join me in thanking Antony Jenkins.